So President Trump once again blasting or at least trying to influence the Federal Reserve ahead of the rate decision that'll be announced tomorrow, warning them to not make another mistake, as he put it. Now, moments ago, Sarah Sanders did answer a question from our own Blake Berman on this very topic. Here it is.
Is he just venting at this point, or is he genuinely worried that if there is a rate hike tomorrow, that the economy will slow down?
The president is stating his opinion, which he is perfectly within his right to do so. I think that is one of the reasons people like him, is because he does that and he does it regularly. He's been very clear about what his position is, while at the same time he understands that the Fed is an independent agency. That doesn't take away the president's right to state his opinion on a particular matter.
And let me ask you,
well, he certainly did so in his tweet earlier today. The president, in stating his opinion, pointed people to the opinion page of the Wall Street Journal and its editorial, a lead editorial this morning. The Journal writer saying that you should follow the signals that suggest a prudent pause in raising rates at this week's FOMC meeting. So in other words, time to pause. On the news side of the Journal, they're covering it like the rest of us are trying to, suggesting that it's likely the Fed will follow through on a plan to actually raise rates. So to sort it all out, no better man than Jon Hilsenrath, the global economics editor at the Wall Street Journal. And you live on that news side, John, I know. And
Connell, and I want to thank you for drawing that distinction between news and opinion. We try very hard at the Journal to have an opinion side of the page and a news side of the page, and not to mix the two together.
You're preaching to the choir. We know a thing or two about it.
I appreciate that you draw that distinction.
Yeah, we know a thing or two about it ourselves. So in the lead editorial this morning, though, the opinion folks at the Journal just basically said, hey, listen, take the politics out of it. There's no inflation. Now's the time to pause. It'll be interesting to see how they go about this tomorrow. But what should we expect?
Well, I don't think they're going to pause on rates tomorrow. I think they are going to raise rates a quarter percentage point. You know, if they don't follow through and raise rates after having telegraphed it for so many months, then basically they send a bunch of bad signals. First of all, they send a signal that they're really worried about the economy. Second of all, they send a signal that there's a so-called put on the market, that the Fed is going to come to the rescue every time the market falls. And the third thing they do is they basically cede control of the Fed to the president by following his advice. I don't think they're going to do that. What I do think they're going to do is go ahead and raise interest rates, but then signal that after that it's anybody's call, that they're done telegraphing more interest rate increases every 3 months. They're going to do this one, and they're going to say, let's see how the economy does.
Right.
You know, is the economy really slowing down? Well, if it is, then we won't raise them again. If inflation is slowing down, we won't raise them again. But if the economy proceeds according to their forecasts and inflation picks up, then they will keep raising them.
Now, I assume from what you're saying, from your analysis of this, that they're very aware inside the Federal Reserve, as any Federal Open Market Committee would be, to how what they say is perceived in markets or anywhere else. Right. But how aware are they, or how concerned, or how would you couch their level of concern about the president, about all these comments and these tweets?
Well, my colleague Nick Timrose did a great story about this a few weeks ago, and you know, Jay Powell's playbook is basically hear no evil, see no evil, speak no evil. You know, basically, you know, when it comes time to talk about the White House, you just kind of stick to what's happening in the economy, what's happening in the markets, and don't act as if like you're being influenced by the Fed. Yeah. It's impossible not to hear it, though. Right. It's impossible not to have some sense of what's going on there. So
we would never know. I mean, we could talk about it. We'd never really know, right? We would never know how much, because it could be a subconscious influence, which you know, maybe there's no point even talking about it if we're never going to know what.
I don't want to get into psychoanalyzing anyone in this town. It's very complicated. But you know what I would say is you know, Jay Powell's view is he's going to call the shots as best as he can based on what the economy's doing. And the fact is, the economy does look like it's slowing down. You know, inflation has softened a little bit. You know, oil prices have come down. Those numbers will be a little bit more modest for a few months.
All right, so bet on the hike.
Maybe it's time to do one more and then pause for a little while.
But bet on the hike tomorrow and then the pause. Says the news side of the Journal. By the way, on the news,
they call that a dovish hike.
I get it. By the way, on Fed Day itself, I bet you wear a tie. It's just the day before. You're a little bit more relaxed.
I hope I'm not letting you down.
Not at all. Not at all. I like the casual look. Thank you, John. Jon Hilsenrath.